Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today's Tuesday. It's November 22nd. Let's see what time it is. It's about 8:26 in the morning. The market's going to open up in about an hour and 4 minutes. I'm a little bit of a late start today. What can I say? Excuse me, but I figured the later that I give you this data before the close, the more accurate of an analysis it'll be, because the more it'll encompass the late nights global and international markets. Now, as you could see, you don't have a color background behind me. I'm not in my studio. I'm actually in my backyard. The weather is so nice, and I get to play with my cats. Clyde right here is right next to me, and you could see the golf course. I live right on the 10th hole. So if you see some balls or some golfers back there, nothing to get worried about. I figured the weather's really nice. I'd do some videos and spend a little time outdoors before it gets really chilly in Florida, right? Really chilly in Florida? That was a joke. Anyway, the market's opening up pretty good right now. We had a little of a downside corrective pressure coming into the energy sector yesterday, but that seems to have passed us by, and I took advantage of it by initiating a couple of energy trades in various services, which is a good thing. Now, as you can see here, the Dow's up over 135 points. The NASDAQ is up 43. We're doing pretty good. But again, this is a big holiday week. And whenever you have a holiday week, you can't take these moves very seriously. They don't have a lot of follow through. That's one of the biggest downsides of holidays. There's not a lot of fund activity. So that's one of the things we have to pay attention to. Another thing we have to pay attention to is the number of stocks making 20-day breakouts and number of stocks making 20-day breakdowns. Only 111 stocks are making 20-day highs, and 21 stocks are making 21 days lows. Typically, unless this number is above 300 or 400, there's just not much momentum to the upside. Now, I understand that the ratio between these two, and the ratio is very important, but it starts becoming really important when you see like 400 stocks on one end, 20, 30 stocks on the other end. When you see 100 to 40, 200, that's not really a lot of momentum. When this number gets to 400, 500, 600 to the upside, that's when it's really strong. Not to the upside. It doesn't really go much above 500, but on the downside, sometimes you'll see 600 before the peak. So the bottom line is, and my point here is, we're nowhere near a major move in the stocks. This is just trendless, random trading action, and I don't want you to get suckered into this move just because you think something meaningful is happening. What do I mean by that? Well, let me get specific. Right now, and I know a lot of you are very cautious. I know a lot of traders believe that this market looks like it wants to go higher. I don't think that's the case, and I think the Fed is going to remind us of that, and I'll talk more about that when I get into the ratio of the odds of the different ratio of rate hikes they will propose. But right now, the market, especially the Dow, may look like it wants to break out, but I'm telling you right now, it doesn't. This is an overbought market. Also, another thing to consider, and this is something really important to consider, the bond market is not really going higher either. The bond market, usually when the bond market stops going higher, it offers less and less upside for the tech stocks and stocks like that. Earnings, we've had actually positive earnings. Big surprise from Best Buy. Best Buy came in better than expected numbers, which is really weird, because a few days ago, or actually about a week ago, Target came out with numbers, and Best Buy is it's one tier below Target on their sales. And Target was saying how electronic sales are doing really bad, and then here comes Best Buy and beats expectations. I don't know the exact numbers, but I think sales were better than expected. Otherwise, and it has to be pretty good. Otherwise, we wouldn't see the stock up 8%. Notice, though, it's still trading below the 200-day moving average. And my most probable scenario would be to fade this trade when it gets a little bit overdone. I think this is just way too much, and I think the stock will remain below the 200-day moving average. It's a technology retail company. Technology and retail. I mean, talk about being in the wrong place at the wrong time. This stock may end up actually be one of my short sells for today. Let's continue, and I'll remember, today is strongest sector, strongest stock, weakest sector, weakest stock. So we got to talk about that. Now let's talk a little bit about pre-market and what we missed overnight and the Fed odds. I'm including that every day in my analysis, including today, which we will need to talk about that in just a minute. So Three major U.S. benchmark indices ended Monday roughly down as market participants remained cautious after reports suggested that China could resume stricter measures to fight COVID-19, while earnings results were also watched. COVID right now is the big factor. Most earnings are already priced into this market. Chinese authorities on Monday said it would shut down businesses and schools. I mean, it's like Groundhog Day, right? In hard-hitting districts and tighter rules for entering the city, triggering worries over the economy. And meanwhile, Best Buy is up on earnings. I mean, you can't make this stuff up if you tried, really. At the same time, U.S. futures have priced in a 71.1% chance of a 50 base point rate increase and a 28.9% chance of a 75. Now, this is something I want to talk to you guys about. I don't know if you've been watching my videos every day, but I've been going out of my way, not really out of my way, but I've been making sure every morning to include this data for you. Now, when the Fed made their announcement, the odds of a 50 base point rate hike was near 82, I think, 83%. And I said the number's going to go one way or the other. And the odds of a 75 basis point rate hike was like 18%. Notice with the economy, with China, with all of these things starting to get worse again, the 0.75 is starting to get baked more into the market. Now, as it stands right now, 0.50 is still baked in. But I'm going to tell you right now, if this number continues increasing, and it's increasing, and if it continues to increase, there's a really good chance that will put a lot more pressure on the stock market. But you want to keep an eye on these numbers every single day. And again, I'm just pointing out to you how the 0.5 or 50 basis point is getting lower almost every day. I think it was near 75 yesterday. And the 75 is getting higher. And that is, in fact, baked into the market. The higher this number gets, the more bearish the market gets. The higher this number gets, the 0.50, the more bullish the market gets. If you want to call it bullish, a 0.50 basis point rate hike is not bullish. But again, I'm waiting for the second shoe to drop, and I'm waiting for some downside pressure or reality to set in again. Today, market participants will be closely monitoring speeches from FOMC members Mester, George, and Bullard for further clues on their monetary policy. And honestly, I would watch this very carefully, and I'm going to make sure to bring it to you every single morning. The U.S. Richmond Manufacturing Index will come out today. It's not a big report in comparison to what's out tomorrow. Tomorrow, we've got a lot of stuff on the table. Economists expecting on average forecast November figures to be at -9 compared to -10, which is pretty good. The Eurex, the stocks 50 futures are up a little bit as investors wary asserted a likely impact of COVID cases in China on economic growth for the world's second largest economy. This is bad, folks. This is really bad. I mean, remember, China is where we get most of our exports from. Chinese Shanghai Composite today closed slightly higher as recent losses invited some bargain hunting. Good. That may spruce up the market here in the U.S. a bit. However, the losses in technology stocks and concern over COVID cases in China continue to weigh on sentiment. A record high increase in daily COVID cases saw the reintroduction of curbs in major cities, including Beijing and Shanghai. Market participants fret that stricter restrictions could again dent economic growth in the country and cause more global supply chains. That would be a nightmare, especially with how sensitive and how careful we have to be right now with our economy. At the same time, the Japanese Nikkei closed higher, benefiting from increased optimism after Mr. Warren Buffett hedge fund raised its stakes in the country's 5 largest trading houses. That's very positive. So Zoom came out with earnings. They plunged 9% pre-market. Lyft dropped 1%. Not really anything major. So we're still having earnings, but nothing really major. Nothing really major. Now, as I mentioned, today is strongest sector, weakest sector. Strongest stock, weakest stock. So if you look at the major sectors, you will see, and we'll go into this right now. You will see here that the major strength still remains in the defensive sectors. Look at energy, and I love this pullback right now. I took advantage of this yesterday, and I love how it closed near the high. I'm not so sure about financials. I do like utilities right now. I love consumer staples right now. I love healthcare right now. Industrial, I'm not so sure about industrial and financial. Real estate, I would be very careful right now. Technology is toast. Basic materials and industrial are in the same boat. Communication services are toast, and consumer discretionary is toast. Best Buy, I don't think that upside is going to be very, very strong. In terms of strongest stocks, so I like the energy sector. The strongest stock right now in the energy sector is Schlumberger. And if you already have Schlumberger, I just want you to know, don't worry, there's a lot of other ones, a lot. Like, for example, Oxy, Valero, Marathon, U.S. Marathon, Exxon, Hess, Conoco, Schlumberger. There's plenty of them. So you've got a lot of them. I just picked Schlumberger. It was in the top 10. I mean, it's as good as any. They're doing exactly the same thing. And I like healthcare, as I mentioned. Biogen. Biogen's the best healthcare stock right now. I know it's a little expensive, but I'm not here to select an option for you. I'm just here to give you the best stocks. Another healthcare stock that I really like, just to give you an idea, is Cardinal Health. I think this stock is a great healthcare stock, and it's on a pullback right now. So Cardinal Health, Schlumberger, and what was the other one? It was Biogen. Biogen. Those three stocks are good. And again, if you already have Schlumberger, you can choose Occidental, Valero, Marathon, Exxon. Just stick with the upper stocks on this list, and you will do fine. Now, to the downside. Oh, boy. I think right now, consumer spending and consumer discretionary technology, communication services is a big, big mistake. Now, Live Nation, this is concerts. Concerts right now. With COVID rates increasing in China, do you think... I mean, it's a no-brainer. But the stock is a little oversold. So I would want to see it go up to the 77, 78 area and then sell the living you-know-what out of this stock. So definitely Live Nation, you don't want to buy the stock. We actually issued a short on it, and the stock did really well to the downside a few days ago, and I think it's going to do it again, but we have to wait for a little correction. Another stock is Fidelity National Services. This is an information technology stock. And again, this is not a great stock right now. And I would be selling the stock. I would definitely be selling the stock. You may want to wait for it to start filling the gap between the 70 and the 80 level. I think it'll get there. But once it gets to the 77, maybe the 75 level, I would totally suggest selling this stock. This is not a stock that you want to buy or own right now. Now, folks, you got to be very cautious. The market does not have a lot of follow-through, so we got to be very careful right now. And we want to only stick with the strongest stocks and the weakest stocks to the short side. And if you're in my VIP room, I'll give you my 5 stocks on my cutting block today. I'll do it today. It's become a very, very popular segment in my VIP room, so don't miss out. Now, speaking of strongest and weakest stocks, what if trading, and I'm going to tell you, folks, I got something for you, and this we've been preparing, practicing, getting ready for this. This is very, very cool. Now, trading has been harder than ever this year for most traders. Most of you know this. Now, what if you could take advantage of one market trend that's proven to happen repeatedly throughout history? Wouldn't it be cool? It's really the only way to trade. One that's unfolded during the Great Depression, World War II, dot-com bubble, the Great Recession, even this market's bear market. Yeah, even this market's bear market. And a very unlikely trader stumbled upon it 560 days ago. I was shocked when she shared the details of the trend with me. She's been doing a lot of homework, a lot of research, and you all know her and you all love her. And I mean that. Now, I couldn't believe that I missed it, but honestly, I did. Mea culpa. What can I say? So I've asked her to reveal all of this info live tomorrow, November 23rd at 1 p.m. Eastern Time, right? Pretty fair. 1 p.m. Eastern Time tomorrow, Wednesday, before the holidays, where we can all relax and chill out. 1 p.m. Eastern Time. She's coming live. I've invited her to the office. She's never in the office, but she's coming into the office tomorrow. You guys are going to love it, love it, love it. Now, each and every one of you absolutely loves her energy. She's been studying the markets. She's an expert by this time. She's been doing this for many, many years, and she's very qualified. Now, I missed this pattern, but she found it, and it's one market trend that's been very consistent for Great Depression, World War II.com, Great Recession, even this year's bear market. I do not want you guys to miss out. It's happening tomorrow, November 23rd, 1 p.m. Eastern Time. I expect that you will never, ever, ever look or trade the same way again after being exposed to this one market trend. I'm not joking. You have to check it out. Follow the link below now. Get excited about this. I'm really excited about this. I'm even wearing my Bull and Bears hat. I may even wear it tomorrow. You never know. Clyde is very excited too. He's sitting right here next to me. I'll see you guys later. Remember, comment questions below the video in the YouTube channel, in the YouTube Wealth Press channel. Bye, guys. I'll see you later. And make sure you attend tomorrow. I'm going to do some name counting, and I want to make sure you're there. Bye, guys. Have a great, great week. And maybe I'll do some more videos here. Let me know if you like the outdoor look. Bye, guys. Send me emails. support@marketgeeks.com. Have a great Thanksgiving turkey. Bye.